Welcome to 5 Good Questions. I'm your host, Jake Taylor. Our guest today is William Green. William has written for The New Yorker, Time, Fortune, Forbes, Fast Company, Bloomberg, and The Economist. He was also the editor for the Asian, European, Middle Eastern, and African editions of Time magazine. Today we'll be discussing his book, The Great Minds of Investing. William has been studying for years what makes great investors tick. Let's ask him 5 good questions. Hi, welcome back to the show, everybody. My guest today is William Green, author of The Great Minds of Investing. Hey, William, thank you so much for being on the show today.
Thanks, Jake. I'm delighted to be here with you.
I have to say that this book is one of the most beautiful books that I've come across in many years. It's absolutely gorgeous, the layout and the production quality of it.
Thanks. Yeah, the photos are extraordinary, which are by Michael O'Brien, and then we were very lucky. We have this incredible designer, a guy called DJ Stout from Pentagram, who used to be the art director of Texas Monthly for many years and won National Magazine Awards and the like. So yeah, I think it's unusually beautifully designed, which I can't take any credit at all for, I'm afraid.
Well, you put the words in, so that counts for a lot.
Thanks.
All right, William, you ready for our 5 good questions?
Absolutely.
All right, our first question is, what are some of the commonalities that you saw when analyzing all of these different investors that are in the book?
I think one of the most striking things was the independence of mind that these guys have. They tended, in pretty much every case, to be kind of mavericks, eccentrics, iconoclasts. They don't see the world the same as the rest of us. And it makes sense if you think about it, that to outperform the market, you have to be different from the market. So
Sure.
These are people who intellectually and temperamentally are kind of different from the crowd. And there was a very nice phrase that Howard Marks, who's one of the most brilliant guys in the book, used, which is that they need to be willing to take uncomfortably idiosyncratic positions. And so I think, he exemplified it perfectly, right? During the financial crisis, when the market was imploding and Lehman Brothers had gone bust at the end of 2008, he sort of looked around and he said, well, is the financial system ending? And he is a hyper-rational, unemotional man. And he said, on the whole, the
Probably
end of
not.
the world doesn't
Yeah.
happen. Yeah, and so because he's this very unemotional guy, he was able to invest $500 million a month while the market was imploding. So he's buying all these sort of busted assets. And so I think that ability, that kind of exemplifies it, that ability to go totally against the crowd, to take these uncomfortable positions. And then also there's this kind of, it's hard to explain, but this temperamental advantage that they have, which I think is that they're profoundly unemotional, the best investors. And so, I said, for example, to Monish Pabrai, who had a terrible time during the financial crisis and was down massively from top to bottom, I said to him, did you feel any stress? Was it difficult for you? And he's like, no, I don't feel any stress. And he said his wife didn't notice that he was going through any trouble. And at one point, he was down something like 70%.
Yeah.
And when he looked back at it, he said, oh, the whole thing, it was orgasmic for me. Because he just said it was just such a pleasure to buy these things that were incredibly cheap. And he would look back on this experience, which most of us would regard as sort of one of the darkest times of our life, with this kind of nostalgia, where he would sort of say, yeah, man, I don't know if I'll ever have a period as good as that again, just because there were so many bargains. And so I think it's that combination of kind of intellectual independence and then also this tremendous sort of ability to take emotional pain, at times that are very trying for the rest of us, when we might panic or flee or curl up in fetal position in the corner of the room and sort of quietly cry. These guys are like, yeah, this is just great, I'm going to buy. So those things would strike me. But also when you think about it, they also have tremendous patience. I mean, one of the things Monish said to me is rule number 1 with investing is extreme patience, which is something that he learned from Buffett. They're extremely diligent, but I think the lack of emotion is one of the things that you almost wonder if you can't copy it. With a lot of these things from the great investors, you can emulate it. But when, Bill Miller said to me that he thinks if you put some of the greatest value investors in an MRI, you'd actually find that the part of their brain that processes the fear of loss is kind of stunted in some way. And so I think there are a lot of lessons in the book that you can learn by emulating these guys. And there are some things like this kind of emotional kind of stuntedness that might be difficult in real life, but as an investor, it's an incredible gift.
Yeah, that kind of reminds me of the story of Michael Burry, and he was diagnosed with Asperger's.
Yeah.
But that different wiring of his brain made for an incredible investor.
Yeah, exactly. He's close to a good friend of mine, Ken Schubenstein,
Yeah.
who is another very good hedge fund manager and teaches the Advanced Investment Research course at Columbia. And Ken says the same thing, that it was a huge advantage to Mike, that he's just not wired the same way. And Jason Zweig, who I'm good friends with, who's a wonderful columnist at the Wall Street Journal, said to me that he thinks with Buffett that Buffett isn't just unemotional, he's actually inversely emotional, so that when the rest of us are kind of falling apart, Buffett kind of has this sort of serene cheerfulness, and so I do think there's an element of wiring that's involved in this. And one of these investors who sort of asked me not to name him in this context said that he thought actually quite a lot of the best investors had a touch of Asperger's about them, because there's this combination of tremendous numeracy and lack of emotion that in a different area of life might be difficult, so, but they happen to be in a business that rewards it tremendously. So Monish Pabrai, for example, said to me that, when he was running a tech company for the first few years of his career, he said, I just hated trying to nurture these people. I just had no interest in nurturing them. He's like, I'm a fantastic game player. And so the ability, for example, to see the world as a game, not as sort of, yes, I must nurture these kids who have all these emotional problems, might seem kind of antisocial to most people. But actually, when it comes to making money in the stock market, which is just essentially a game, it's a tremendous advantage, I think.
Yeah, that's incredible. So question number 2, you had Michael O'Brien, who took all of these portraits of these investors. What was it like working with him, and how did he get all of these amazing photos of these people?
Yeah, Michael's extraordinary. For people who don't know him, Michael is a very experienced portrait photographer, one of America's preeminent portrait photographers. And one of his most famous images that a lot of people in the investing world would know is the cover of Roger Lowenstein's great biography of Buffett, which is this image that he took of Buffett in 1988, where he coaxed Buffett onto the roof of his building in Omaha on a sort of gray day. Yeah. And Buffett's sort of standing there like this,
his hair's kind of
mildly annoyed. Yeah, because I don't think he really wanted to be on the roof at all. Mike lured him on there. And that image is in the Smithsonian Museum. And so Michael has been obsessed for many years with value investing, ever since meeting Buffett in 1988 and being, Buffett got him to buy
Berkshire?
Buy Berkshire Hathaway. Yeah,
that probably worked out okay for him.
Yeah, paid for his kids to go to college. So it's been an amazing gift. And so basically Michael has been working for the last really 5 years taking portraits for this book of people like Charlie Munger, who was the first one, and Irving Kahn, who was 108 when Michael took the portrait. And they're kind of remarkable portraits because they're all black and white. They're very up close. They're very intimate.
Yeah.
And they all have the same background. So Michael would carry around this sort of enormous strobe light and this enormous gray backdrop, which you open up and it's something like 12 or 15 feet high. And so he would carry this around the country and around Europe or wherever to interview to take photographs of these people. And then because he's got this sort of very simple, kind of placid backdrop, he then gets extremely close to the faces of these investors. So you're really kind of looking into the eyes of a Munger or a Buffett. And so there's a sense that you're kind of capturing the essence of their personality in this very intimate, kind of vivid way. So he would specifically ask them not to smile, and he doesn't talk while he's taking photos. So in an hour he might take 250 shots, and if he wanted them to turn, he would sort of say, like this to get them to turn their chin, or like that. And so there's this intensity to his engagement with the person that he's photographing that kind of makes sense. If you're a layman like me and you don't really know why the portraits are so good, once you know that that's what he's doing, it makes sense because of his intense engagement. When you look in the face of a Munger, say, there's this kind of ferocious engagement with it. You're almost scared looking into Munger's face because
it gets reflected, I think, back from the photographer.
Yeah, they feel his engagement, I think, and so they're intensely engaged. There's not a sense of, yeah, I've got to sit back and smile for the camera. It's like, no, they're right up there. So I think he's really a master. But it was fascinating to get more of a sense from interviewing him myself of how exactly he does it.
Yeah. So question number 3. Who did you connect with the most as an investor, or of these investors as a person? And maybe tell us a story that didn't make it into the book.
There were a lot of them that I really liked tremendously. I mean, I like people like Monish Pabrai tremendously. I spent about 6 hours with interviewing him in Irvine. I like Joel Greenblatt tremendously. John Spears, a lovely man. I mean, these are remarkable human beings. But I would say that the person who got under my skin most, perhaps, was Arnold Vandenberg, who's not the most famous of the investors as an investor, but has the most riveting of all of the life stories, I would say. And is also just the most sort of wonderful human being. And we talked multiple times, and he would talk about his childhood in this incredibly vivid, resonant way. So, I mean, just to give you a sense of how unlikely his story was, this is a guy who was born into a Jewish family in 1939 in Amsterdam. He was actually born on the same street as Anne Frank. And he spent the first couple of years in hiding in their house because, his parents were basically terrified that the Nazis would come into the house, they would search, and they'd find him. And he would make a noise. His young brother as well could make a noise. And basically, if you were in Holland and you were captured, you'd be sent to Auschwitz, which was the place where most Dutch Jews were sent if they were captured. And so, when he was about 2, his parents made this extraordinarily difficult decision, which was basically, we're going to stay here in hiding, and we're going to send Arnold away and see if he can escape, across Amsterdam, and get him into a safer place outside the city. And so this 18 or 19-year-old girl from the Dutch underground basically comes in and takes him away with fake papers, sneaks him out of Amsterdam, takes him to a rural orphanage several hours away, where he spends the rest of the war. And his parents both ended up getting captured and went to Auschwitz, and they actually remarkably both survived. And they came to pick him up at the end of the war in 1945, at which point he's, I think, 6 or 7. And he didn't recognize either of them. And he said to me, I was thrilled to go with them anyway. I didn't care. I would have gone with anyone. And he said he was so malnourished at that point because they just didn't have food or water there that he basically couldn't walk. He was crawling almost everywhere. And he said that his father was terrified to lift him up because he was all skin and bones. And his father literally thought that his body would sort of break if he picked him up. And then they end up taking him to East LA, to a really rough neighborhood in East LA, where he's this sort of emaciated kid getting beaten up the whole time. And he goes from this extraordinarily unlikely background where he just had no chance of success to being this kind of remarkably successful investor and a remarkably successful human being. Now in his 70s, managing about $1.5, $1.6 billion with a good, 30-year record of beating the market, 40 employees, very charitable, very philanthropic. And he's just a sort of lovely man. And one of the things that I didn't include in the book, to answer your other question, sorry to give you such a long-winded answer.
No, it's an incredible story.
He's extraordinary. One of the things that I didn't have room to put in was I asked him more about the girl who saved his life, who sneaked him away. And he said the extraordinary thing was that she didn't know his family. She was a total stranger. And he said for years it troubled him tremendously, this question of why you would put your own life at risk to save somebody else who you didn't know. And also why her father would allow her to put her life at risk to save someone she didn't know. And he said it really obsessed him, this question. Many years later, he said he's wonderfully candid, wonderfully open. And he said to me, I was talking to my shrink, and my shrink said to me, well, it's simple. And he's like, really? Well, why? Explain. And he said, the shrink said to him, there are certain people for whom their life matters more than their principles, and there are other people for whom their principles matter more than their life. And he said it had a really profound impact on him because he realized that, he wanted to be one of these people who lived by his principles. And many years later, also not included in the profile that I wrote here because it's a relatively short profile, he actually tracked down the girl, and they who's now dead, but I think was in her 70s when he spoke to her 15 years ago, something like that. And they started a correspondence, and neither of them had known that the other one had survived the war. So there was something sort of incredibly touching about his story, but also really inspiring because it makes you think that if you really actually put your mind to something, you can actually achieve extraordinary things. And he'd been obsessed with this idea of how you gain control over your consciousness, and so he spent decades studying things like the power of the subconscious mind and hypnosis and visualization and spirituality and the like. And so really, in some ways, his story was about this ability to overcome just extraordinary adversity. And I think there are lessons in that for all of us, because to some degree, we all face tremendous adversity at some point in our lives. And to look at someone like Arnold and realize that he'd faced stuff that was way beyond anything we'd faced, and yet had sort of triumphed and had kept his dignity and his decency. That was a profound and moving experience for me.
Wow, that's really beautiful. I'm glad you shared that. So, question number 4.
Yeah.
Okay, all of these investors, I'm going to put you on the spot here. You have to pick one of them to manage your net worth from here on out. So, I mean, the obvious choice is Buffett, except maybe you won't get enough years out of Buffett to make it worthwhile. I mean, hopefully he's here for another 20 years or more, but you got to factor that in. So, who's your pick to take over?
It's a very good question. This gets to my prejudices about how to invest as well, and so I should probably come clean on what they are. So, because obviously there are a lot of different paths up the mountain that work, but my preference, not that it's the only way by any means, is sort of to invest in a fairly concentrated way, to have a handful of stocks that you really understand, that you don't trade, that you buy at a deep discount. So I'm kind of a contrarian value investor. And so the sort of people I would be most drawn to in the book would probably be people like Monish Pabrai, Francis Chu, who's an extraordinary fund manager in Canada.
Mm-hmm. Also a great story of rags to riches. I mean,
remarkable. Yeah, I mean, Francis, who taught himself to invest by reading Ben Graham's book, basically, was an immigrant from India who came with 200 Canadian dollars in his pocket. And actually, one thing he told me was that he still owed money from the plane flight that someone lent him. So actually, his net worth was negative, and he became an electrician in Canada and became a great investor. So I think Francis is really interesting as an investor because he does have this very concentrated, very patient approach, but he's also extremely conservative, which temperamentally for me, because I'm sort of more fearful than some of these great investors, is quite a good thing. So Francis at the moment has about 30% of his money in cash because he just doesn't find any bargains. And he's, I said to him, how long could you wait without doing anything? And he said, 10 years or more. And so I think that extreme patience and again with him, he's very analytical, very unemotional, almost sort of seems robotic when you talk to him sometimes. Like he's definitely got that unemotional quality. So I think he would be very good. Monish, I suspect, will have better returns than Francis because he's more of a risk taker.
Yeah, it's going to be a wilder ride to get there, though.
Yeah,
I think,
yeah. But I think he's extraordinary, Monish. I think he's a very brilliant analyst. I'm close friends with Guy Spear, who I worked on a book with, and Guy adores Monish and is very close to Monish. And Guy's view is that Monish has as good a chance of becoming, the Warren Buffett of our generation as anyone, really. So I think he's a great analyst, but I think he might give me heart palpitations if I had my entire net worth with him. So maybe Francis. But then Joel Greenblatt is extraordinary as well.
Yeah.
And so but Joel has changed his approach to investing, which is very interesting. So I think, his old approach was probably a bit more similar to Monish's approach, which was
concentrated and
very concentrated, very risky. But his view is that the trouble is that the shareholders tend not to have the temperament to stick with it, so they end up sort of shooting themselves in the foot because they panic at the worst possible moment. And that may be true, that it's just too difficult to stick with that approach for most people.
Yeah, I think he's even found that with the magic formula, people have a hard time sticking with it, even though it's more robotic than his old fund days when he was had 5 really concentrated positions.
Yeah,
but just because of the underperformance issues that happen with any strategy, it's just incredibly difficult. I mean, it's simple, but it's not easy, as Buffett says.
Exactly. I think temperament is sort of everything. You've got to be really bright and you've got to be really diligent, but you can, excuse me, you can have all of those qualities and still be a disastrous investor. I mean, look, Isaac Newton was one of the cleverest guys in history and lost a fortune investing. So it's not about IQ points, and I think this temperamental issue, the lack of emotion, is absolutely key.
Yeah. So question number 5. Everybody wants amazing returns, but there's more to life than just money and investing. And you already probably touched a lot of this with the story about Arnold, but which of these investors do you feel like has lived the richest life outside of the investment world that we would want to look up to? Because everybody looks at the returns and wants to be that person, but maybe the price it took to get there wasn't worth it in some cases, like maybe personally or family wise. I mean, there's plenty of sacrifice that happens. So
it's a very interesting and important question, I think, because there was clearly a split among some of the people in the book. There were a few people who I think were, they were great money makers, but not necessarily amazing human beings.
Yeah.
And then there were a lot of people who I think actually are really remarkable human beings and profoundly admirable. And I'm not saying this in a moralistic way. I just think some people, they're sort of money-making machines, right? They just have tremendous sort of, they're just wired for that particular game. But then there were people who I think had thought really quite deeply about life and about what gave their life meaning. And their attitude to money was really interesting. I mean, look, Munger has said that what wealth really gies you is independence.
Yeah,
and I think it's a very profound idea. And so I would say, I mean, one of the most interesting people on this front was Joel Greenblatt, because he truly has so much going on beyond the world of investing. And I thought that was really fascinating. Look, even someone like Buffett, I think, is quite narrow in a sense, despite being an incredible philanthropist. There's a kind of intense focus on the game of compounding, and just no one has ever been as good at that game as he is. Mm-hmm. But I remember Carol Loomis once saying, I used to travel into the city on the train sometimes and sit next to her because we both worked in the Time Life building, and she would talk about saying, oh, there was a beautiful sunset, and Buffett would just say, oh, I hadn't noticed. And he just was totally unvisual. Like there was a narrowness that's part of his genius.
I heard a story that he didn't even know what color the carpet was in his house. Like it was like that kind of a blind to those kind of details of life.
Exactly. Yeah, I think Susie had changed the curtains or the carpet or something like 6 years before, and he hadn't noticed. It was something great like that. Yeah. And whereas you look at Greenblatt, who has this extraordinarily inquisitive mind, and he's not only been a brilliant investor with multiple styles of investing, but he's written some extraordinary books. I think the little book that beats the market sold something like 400,000 copies, including something like 100,000 in China. He's an extremely good stylist. He actually really writes well. He's been teaching at Columbia Business School for something like 20 years. As far as I recall, he doesn't get paid. He doesn't care about the money. He just likes the fact that he goes in and he can make a difference in these students' lives. And so I think he's taught 800 or 900 students over those years. And he starts by saying, this is not about the money, and you're going to have a pretty stunted life if that's all it's about. And so you have to figure out what you're going to do with the money. And then he has 5 kids, and then he's become a remarkable philanthropist and really kind of a trailblazer in the charter schools.
Charter schools, yeah.
World. So, he's done it. I mean, there's actually a really interesting link between how he approaches these other things and how he invests. Because with the charter schools, he basically was trying to figure out a really smart way to beat the system. And so how do you create schools where you take the least privileged people from the roughest neighborhoods in New York and for not that much money, give them an incredible education that increases their chances of doing well in life? And so he figured that out in much the way that he figured out after being a student at Wharton, I can beat the market, because his professors at Wharton had said, no, the market's efficient. And so what he likes to do just temperamentally and intellectually is kind of to take these very difficult intellectual problems and kind of crack the code. And then to find solutions that are sort of replicable, that you can scale. And so I think it's really fascinating that he's managed to do that, to crack the code, both as a philanthropist and in this charter school movement, and also as an investor. So, but then, Monish Pabrai is also fascinating, has a fascinating life outside investing. He doesn't want to be remembered for his hedge fund. He wants to be remembered for this charity Dakshana, which is extraordinary, which he and his wife set up, where basically they take the poorest, brightest kids in India, and they coach them for 2 years. They pay for them to get coached for 2 years to take this exam to the Indian Institute of Technology, which is the Indian equivalent of MIT. And if they get in, it just transforms their lives and transforms the lives of their families, because it just gives them enormous opportunity to, I think something like 40% of Microsoft's Indian hires come from the Indian Institutes of Technology. So last year, there were 196 Dakshana scholars who got into the Indian Institutes of Technology. And so Monish said to me that once he gets to a point where they have, I think, 15,000 alumni of the Dakshana Foundation, he said he thinks it'll actually change the trajectory of India, because you're kind of creating this army of very gifted, very poor kids, some of whom have parents who make $500 a year, $600 a year as rickshaw drivers. And so when you talk to someone like Monish, I think there's a kind of glow to him that comes not really from the fact that he's made a lot of money as a hedge fund manager, although he gets tremendous pleasure out of the game, the game and the contest and all of that. But I think there's much more to him, and I think that's the case with people like Tom Gaynor and John Spears and Arnold Vandenberg. These they figured out that money buys you something, but at a certain point, it's so profoundly ephemeral that if that's really all you've done and your whole life is just sort of trading bits of paper, it's kind of meaningless.
Empty,
yeah.
So, bonus question number 6. We always ask for a book recommendation, and usually this is something that's underrated or is that you just feel like hasn't gotten its fair share of attention. What do you have for us?
I'll mention a book that I had never read until Bill Miller recommended it to me, which is, I think, really deeply fascinating, which is Thoughts of a Philosophical Fighter Pilot by Jim Stockdale, who, I don't know if you remember when Ross Perot was running for president, he had as his vice presidential candidate Jim Stockdale, who I remember looking at and thinking, wow, this guy looks like a buffoon, sort of, just sort of lost in the glare of the lights on stage. He just looked totally out of his depth. And what I didn't realize was that this was exactly the same Jim Stockdale, who when I started reading about him, I realized was one of the most extraordinary guys of our time, who basically was a fighter pilot who was shot down over North Vietnam in, I think, 1965. And because he was the most senior prisoner of war, was tortured, I think, 15 times over 7 years that he was in captivity. I think he spent 4 years of his life in solitary confinement, 2 years with his legs padlocked in chains. And what's fascinating is that Stockdale, this guy who I totally underestimated and dismissed in the way that in a kind of naive and ignorant way, he he, it turns out, had become obsessed with Stoic philosophy. And so I think because he was on a sort of fast track to be a very senior guy in the armed services, had been sent to Stanford as a mid-career pilot. And he'd been walking past a lecture theater where a professor had been talking about Epictetus and the Stoics. And he'd become fascinated by this stuff. And when he was shot down, as he was sort of, falling through the air, he I think said, I'm leaving the world of technology and entering the world of the Stoic philosophers. And what the Stoics teach, which is profoundly important for investors and for all of us, is basically this ability to endure misfortune.
Yeah.
Which is one of the reasons why Miller talked about it. Because I was asking Miller, who had a terrible financial crisis,
yeah,
what did you do? What were you reading during the crisis that gave you solace? And he said, well, I read Epictetus, I read Seneca,
yeah,
and I read this book by Stockdale, and which he'd obviously read before. And what Miller said to me is that it really informs your general sense of how to deal with misfortune, because the Stoic idea is you can't control what happens to you, but you can control your attitude towards it.
Right.
And I think one of the things that struck me in writing all of these profiles was that even though these people have had kind of extraordinary success, they've all been through the ringer, like us. I mean, there's Don Yackman said to me at one point, the rain falls on us all, which I thought was a wonderfully poetic phrase. And the idea that if you have a few $1 billion, you're somehow immune to suffering and pain is just not true. And so one of the biggest questions that I was looking to answer through the book was, how do you learn to deal with adversity? How do you overcome the setbacks, the humiliations, the failures, the periods where you're out of sync with the market and you go 3-4 years where you look like a fool and you're getting pilloried in the press. And so it was fascinating to me that Miller had turned to Stockdale. And I think there's great wisdom in Stockdale, great wisdom in Epictetus, and it's a sort of practical philosophy, because there's an intellectual elegance to it, but it also relates to your life, because you can say, all right, so I'm not, I may get my head kicked in, but it's my choice how I deal with that. And one of the things that Stockdale said was that what kills you is the shame. When you're being tortured, it's the difficulty is that because you inevitably crack when you're being tortured, you just have this tremendous shame. And so he said it's not really the physical pain that kills you. It's that loss of what the Stoics would refer to as the good man inside you. And so he devised all of these ways to deal with that. So for example, I think one of the things he got all of his men to agree to was that nobody would leave early. Like if you were offered early release, you wouldn't take it. And that was a really key thing, because it enabled them to keep their sense of human dignity. And so I think that whole Stoic philosophy is really fascinating. It gives you a very practical way to deal with adversity, and I think Stockdale's book is sort of a
pretty relatable way to.
Yeah, it's a good entry point, I would say. So I hope some people enjoy it.
Nice. Well, William, we really appreciated having you on the show. I mean, it was a real fascinating conversation.
Thanks. It's such a pleasure to be with you.
All right. Take care.
Take care. Thanks. Bye.